Welcome to Kitchen Table Finance, the podcast where we serve up bite-sized pieces of financial advice to simplify your money and your life.
Hey, Dave, how you doing today?
I'm doing fine, Nick. How are you?
Seen better days in your career, maybe?
Oh, yeah. Well, I said ironically, like we say we're doing fine. Everybody keeps asking us, so maybe we shouldn't be.
Yeah.
So
It's an interesting dynamic, and this is kind of a special episode for us off of our regular cadence, just because obviously there's been a lot of market stuff recently with, the S&P 500 touching bear market territory for a while there and hasn't exactly rebounded by any stretch of the imagination with everything going on with tariffs and the potential global trade wars. And so what I wanted to do today, Dave, is just talk through, how to think about and respond to the emotions that go around this. So we're not going to dive into any of the technical aspects. We actually have our quarterly market review coming up here probably next week where we're going to dive into the specifics of what's happening in the market and why.
Yeah.
But I really wanted to focus on the emotional aspect of this thing. And, there's been a lot of good stuff out there. And so we're going to pull from a lot of leaders in like the behavioral finance world. But I just think it's a good time to like settle down and think about like what's going on and what your reaction is to it.
Right. Not focus on the technicalities of tariffs and what it means for the economy and what's inflation and what's not. And instead, let's talk about basic principles that should guide us regardless of what is causing the market volatility.
Right. Well, and, part of this, idea was inspired by Carl Richards, and we're going to talk a little bit about, kind of what his thoughts were on this. And, his first framework was, a hug, right? And I think that's the thing that oftentimes we forget about, where we just want to sometimes go over the top with like the logic behind this. And you can't get to the logic unless you address the emotions.
Right.
And, the first thing I want to say about the emotions is it's a natural reaction, right? Like the human brain was, meant to fear certain things, right? For survival is a good, like healthy thing. But, as it translates to some of the things today, there's this idea behind like our first instinct is going to be afraid and want to do something, right? Like those are like the basic principles that kind of come in. And so, I'll be honest, I'm afraid right now. There's a lot of things that are going on that, I don't know what the conclusion is going to be. I have no way of predicting that. But I also am not letting that emotion necessarily cloud my judgment of the rational side of things, right?
Yeah. A client asked me earlier, like if I was afraid right now, and I guess like if I had to, the way I would put it is, I accept what's going on, whatever the cause. I'm trained well enough to know we have to accept market volatility, and nothing that has happened yet is outside the norm of what we expect.
Yeah.
And I think that the way the headlines have been around this has made it worse than it actually is in people's perception. And so I guess my take on it is, I'm not afraid of the long-term outcomes because I believe in the market principles that we're going to discuss. But I worry about it. I think you probably like where I get emotional is worrying about what my clients are going through more than for myself. And it's more of a fear of like, am I going to, it's kind of like being the platoon leader, right? Am I going to be able to get people through this?
Yeah.
So it's not that we're not feeling it. It's just, I think it's a little nuanced compared to what most people experience.
Yeah. And I would say that, we're both very optimistic about the long-term, longevity of the markets and, especially, on a global standpoint. Right. But also, in the short term, like we got to get through the tough times in order to get the rewards at the end. And that's very easy to say and very hard to kind of go through. And, we work with a lot of retirees. And so you have this dynamic of, hey, I want to retire in the next couple of years. And then all of a sudden the market tanks. Like, how does that affect you emotionally? Or the flip side, I just retired and now the market's tanking. Like, do I have to go back to work? Like, these are concerns and fears that people have that we have to try to be able to get them through. And it's not always as easy as saying, just be patient.
Well, and we live in a world where we try to put everything down. You and I live in a financial planning world that tries to put everything down in charts and figures and graphs and logic and rationale. And we can build you the most beautiful, airtight financial plan in the world, but unless you can control your emotional response in times like this, it's meaningless. And there's no good way to avoid the rational, or to make the rational more rational in that situation. I guess that's poorly worded, but I think you get my point.
Yeah. Well, and and the other thing that I would tell people to do and to think about is like, have these conversations, right? Like the last thing that I want is people to be afraid and nervous at home, losing sleep to the point they can't take it anymore. Like I want to have those conversations earlier rather than later, even if you think, it's crazy, or even if you can kind of rationalize in your mind that it's going to be okay, as that kind of builds, and like letting that out and having those conversations and listening to clients right now is one of the biggest things that we can do. And we even do this internally, right? Like we have team meetings all the time. And right now it's hard for us to have a team meeting without like getting into like how crappy things look right now. Right. But that's therapeutic for us too, to like have a sounding board to talk these things out. You know what I mean?
Yeah. And it's funny because like, cognitive behavioral therapy would tell you to decatastrophize and not talk, but then there is something therapeutic about just like screaming about things too. So find what works for you, but
for sure.
Yeah.
And another thing that we've been doing, which is what we're going to kind of get into today, is just thinking about, or like doing lots of reading from the right sources, right? So like there's the financial media that's going to try to make this, sensationalize it to make you lose your mind, right? Because the fear sells, right? And that's hasn't changed, and that's still going to be out there. And then there's this other side of folks. So we're going to give some examples of that. And I think the greatest place to start is one of the greatest investors ever, which is Warren Buffett, right?
Yep. Always, you can always count on Warren Buffett's wisdom to sound like Abraham Lincoln in times like these.
Right. Yeah. And it's not necessarily stuff that he's saying now. It's stuff that he said before that I'm sure he would repeat now if you asked him, right?
Yeah.
So a couple of quotes that I really like. The first one is just, the American economy is going to do fine, but it won't do fine every year and every week and every month. I mean, if you don't believe that, forget about buying stocks anyway. It's a positive sum game, long term. And the only way an investor can get killed is by high fees or by trying to outsmart the market.
Right. Be in the market and just know that in the long run, it pays off. There's lots of other gems out there that fit with this, but I think you're right. I think that captures the basics.
Yeah, and I think just for our listeners too, like you're going to get a lot of outside sources right now trying to make you change your plan because they are financially incentivized to do it. Like, oh, look at our investment strategy that times the market. You wouldn't have felt any of this pain if you were with us. Like those things are real and do happen, and so you have to be wary of that.
And the other thing that happens, so every day, every week, every month, you can comb the headlines and find somebody calling for imminent disaster.
Yeah.
And what happens when that imminent disaster strikes is all the news outlets look back to see who said, so right now we're seeing a stream of like, I told you so sort of folks from December, early January, but those same folks would have been wrong all of last year and all of the year before. And it's not that they know anything magical or, their turn finally came up in terms of the thing that they were shouting about was the right thing.
Yeah.
So you've got to be wary. I will say I've been actually pleasantly surprised. Both the New York Times and the Wall Street Journal have run very good articles in the last few days that you and I would both endorse, and I should have sent these to you before I brought them up. But one, the New York Times was basically it was using somebody we're both a fan of, Wade Pfau, basically saying, it was about like what to do now if you're on the verge of retirement or have just retired. And it was basic financial plan. It wasn't like, oh, you need to, tariffs are coming, you need to do XYZ. It was anybody going into retirement should make sure they've got a year or two's worth of income and safe assets, should consider dialing the risk back from what they had in their portfolio when they were working. Um, the Wall Street Journal, Jason Zweig, basically saying, nothing that's happened is outside the realm of what normally happens. And the Wall Street Journal's best investment guy is basically telling people this is normal in terms of what we anticipate with the markets.
Yeah.
So
yeah, it's
I was pleased to see
there's
that.
a wide range. There's like two sides of the coins. I'm glad that stuff is coming out because it is helpful.
Hmm.
But then you have the other side of the coin
Yeah,
about like how this is completely different and we've never seen it, which is true. But also
not quite
we're going to get
true either. Yeah,
the end result is going to be the same, right? Like yes,
yeah,
it is slightly different, but we have seen these parameters and these
yeah,
things happen in the market before. And so if you go down the fear trend or the fear path, it's, you start getting into how this is different and how the economy is never going to bounce back. And, that's just not true.
hmm,
Um, so let's see. Another in Buffett quote that stuck out to me this week: the most important quality for an investor is temperament, not intellect.
oh yeah, that's a
Right?
good. It's always been a gem. Yep, yep,
Can't outsmart the market, right?
yep,
But having the right temperament goes a long way.
yeah.
And then this last one: the stock market is a device for transferring money from the impatient to the patient.
Yeah, and Warren Buffett has made himself a billionaire many times over by being
Yeah,
the patient guy.
yeah, for
So
sure, for
yeah,
sure.
yeah, little
Um,
newer and a little different kind of guy to talk about is Carl Richards. We bring him
yeah.
up quite often, but he is the client communication guru out there. Um, in terms of how financial planners should interact and talk with their clients. And in times
Mhm.
like this, he's gold.
Yeah, so I think a couple things. He had a couple podcasts. We'll put them in the show notes that I think are helpful for everyone. This first one on what to do when markets are scary.
Hmm.
And the basic premises, like we talked about a little bit before, is everyone yells that you should do something.
Hmm.
But what you need someone to give you a hug or at least listen to you, right? Like
Yeah.
let's
Yeah.
embrace the emotion and not try
Yeah.
to run away from it or do something different. And then once that fear subsides, then it's time to revisit your portfolio, right? But
Yep.
not in a heightened emotional state. It's normal to feel nervous or scared. We're hardwired to run away from danger,
Yeah.
and it's okay to feel the way you feel, right? We're
Yeah.
not saying that you shouldn't feel that way at all. You need to embrace that emotion
Yes. Well,
before you can
and
deal with
and
it.
and I would add to that action bias of everyone yelling that you should do something is part of what's hardwired.
Yeah,
Like we can't just stand here. We've got to do something.
right,
Yeah.
right. And then he did another episode on tariffs and economic uncertainty and just kind of thought through like, how do we create a framework for how you should think about things, right? And the first step,
Hmm.
like we talked about, is a hug. And then from there, a flight to simplicity, right? How can I make my financial life simpler? Create space to think clearly
Yeah.
and focus on what we can control, right? We have no control over what tariffs are going to be or what they're going to do or what
Hmm.
impact they're going to have, right? So what can we control? And then this fourth one, I think, is like a very important like action item of things. Like if you feel that you should do something or you need to do something, this is a
Yeah.
great thing to look at, which is avoiding new commitments, right? Are there
Right.
major purchases that you can delay? Are there small savings opportunities? He went into, looking at all of your different subscriptions, things like that maybe you don't need. It's a great time to look at that.
Yeah.
And replacing no with a bigger yes to something that matters, right? And really
Hmm.
thinking back to like what's most important to you. What do you, is it relationships? There's a lot of things that you can do to
Hmm.
embrace what's important to you that don't necessarily mean spending more money, right? And so in cutting back on money or spending money doesn't necessarily mean you can't do things and say give a bigger yes to some of the other things. I think from like a personal financial standpoint, behavioral finance, it just makes a ton of sense because you can control those things. And even though you might be able to go out and do that, make that major purchase and, talk to your financial planner about it, even delaying it a little bit might make you feel more secure, which I think is a huge step in the right direction.
Yeah. And from a practical standpoint, we've both seen through bear markets and working with clients how durable financial plans actually are. We've got pretty good tools that build in the assumptions. There's going to be a 20% decline at some point. There's going to be a prolonged bear market. These things are going to happen. So a lot of times we're actually in the role during these kind of crises. That's not the right word, but these kind of markets of giving people permission to still do what they were going to do. But I think we've both seen people's instincts is to draw in and do without. And from a that makes the plan work that much better if we're not, pulling money out in a lousy market. But just also remember too that check, because it may not be if your advisor's done the right things in the first place, your plan is probably more durable than you realize.
Right. Yeah, for sure. Yeah. So, and I would think of it, gauge your fear factor, right? If you're very afraid right now, maybe you put it off, even though you probably don't need to, right?
Well, the psychological, the psychological value may outweigh the actual financial value. If it makes you feel better in a time, or if that allows you to stay invested for to participate in the recovery, then that's probably the right choice.
Yeah. It's a trade-off that we would agree with, right?
Yeah.
So one of our favorite authors and books of the last couple of years, Morgan Housel's Psychology of Money, talks about a couple different strategies in this book. And I think, the big one is volatility is the price of admission, right?
Yeah.
So it's a fee, not a fine. And in order to be an investor, you have to, if viewing it that way really kind of helps set the stage for the understanding of like, this is the price that I have to pay, is that you're going to have these bad times, right?
Yeah. Well, and to put it another way, if your portfolio was perfectly safe with no volatility, it would pay you the same as your savings account.
Yeah. Right.
Because that's what you're getting paid for. You're getting paid to stomach those ups and downs.
Yeah. Yep. And this is that time. This is that fee, right? Don't try to time the market. Timing is impossible. Timing the market is everything. Anchor yourself to your goals. This is why we do the process the way that we do it around here, of figuring out what's important to you, what your goals are, because that hopefully helps you stay invested in times like this, right?
Yeah. Well, one of the things Morgan Housel also says is recognize that you're playing a game of retirement savings for the most part. I mean, there's other reasons to invest, but most of his readers and our clients are playing the retirement savings game. A lot of the headlines you see in the media are for people playing a different game. They're for traders. They're for people that don't understand the game ththey playing and think they should be traders and trying to like change change with every trend. When really, if you can just ignore the ups and downs, that's the game you should be playing.
Yeah, absolutely. Emotional discipline, better, more important than intelligence, right? We talked about that with the Buffett quote.
Temperament.
Think decades, not days, right? This, your retirement plan is a long-term game, right? We're not, what happens in 1 or 2 days isn't going to change the long-term outlook. So thinking of it and zooming out during downturns, it might feel huge today, but chances are it's going to be a blip on the radar in 5 years from now. And if you don't believe me, we can go back through the market chart and talk to you about all the different things that at the time felt like the end that are just a blip on the radar at this point.
Yes.
And preparation is more important than prediction, right? Have a plan for chaos. We can throw a link in the show notes to our lifeboat drills that we did a couple. I think it was last month. We did an episode on talking about lifeboat drills.
But no, that gives you ways again to take the emotions out of the decisions in the moment.
Yeah,
Yeah,
for sure.
know what you're going to do and why. Well, and bigger picture, preparation also means ignoring, like, regardless of what was going on in the market. So I just corresponded with a client who's nearing retirement, and he said, "Okay, I'm in that danger zone, more or less, and I'm really worried about what's going on. What should we do?" And I was really pleased to be able to pull up, where he was at and what was going on and say, "Hey, remember last year when we talked about the fact you were in the danger zone, if you will?" I don't think we called it that at the time, but getting ready to
Yeah.
retirement, we put 2 years worth of your income needs into money markets and CDs, and we reduced your stock allocation. And that's, we can talk about whether we need to reduce it more or if you're uncomfortable. But in terms of my side of it, the planning side of it, we did those things.
Yeah.
You know, be proactive and prepare. Don't
Yeah.
react.
I mean, such a huge benefit, right? Like I have clients that we set aside cash for certain things that they wanted to do this year.
Mm-hmm.
And now, we're in the midst of this, we're able to, send that money out to them because it's no worse for the wear, right? Like
Right.
that was the whole intention
And
of having those conversations and thinking those things through.
we're not always going to get that perfect and get it right,
No.
but the more preparation you can make, the more you can anticipate your needs, the better off you'll be instead of reacting in the moment.
Yeah, for sure. Dr. Daniel Crosby has done a lot on emotions, market volatility, and a couple things that he recommends are developing emotional awareness. So
Mm-hmm.
recognizing your personal emotional triggers and understanding how they influence financial decisions.
Yeah.
I mean, right. I mean, it's funny, but it's not, right. This is so political right now that depending on
Yes.
what side of the political spectrum, you're either pulling your hair out or you're feeling okay about it, and
Yes.
the real answer is somewhere in the middle, right? But you have to understand how that is going to impact your decisions
Mm-hmm.
and your emotions, and go into it thinking that way, right?
Right. And to kind of build on that, think about the news sources that you follow. Are they just playing on your fears? Are they just telling you what you want to hear, good or bad?
Yeah.
If our job allowed me to unplug from the news, I would do it.
Yeah.
I would do it because it does, I know that, like, the more I read, the more I worry, and the more I worry, the more likely I am to make a mistake. Now,
Yeah.
we're in a position where clients are going to ask us about the headlines, and we can't just blithely say, "Oh, I don't read the
Right.
news." But so that's not an option, but I would tell those clients that's what they should do.
Yeah, for sure. Figure out what that thing is that's going
Yeah.
to help you de-stress, and every time you think about turning on the news,
Yeah.
go for a
I
walk in the woods, or
uh,
whatever it is that's your thing. Do that instead of listening to the news right now.
when I was an assistant back in the beginning during the tech bubble crisis, I remember one of the seasoned veterans that I worked for telling his client he was going to come over with wire cutters and cut their cable, and that would
Right.
solve half their problems. And that stuck with me.
Yeah, we
So
need some sort of app to be developed, where as financial planners we can just turn
turn
everybody's
off, yeah,
TV to
turn
like
off
some
their
sort
news.
of
Sorry,
Zen.
you don't need to know what's going on today. Tune back in. We'll
Yeah,
tell you next month. Yeah.
exactly.
So
Also from Dr. Crosby, maintaining discipline and patience, sticking to a well thought out investment plan, avoiding those impulsive decisions driven by short term markets. We talk about this all the time, but like when we build your retirement plan, we
yeah,
do it with the understanding that these times are going to happen, right?
right.
And we know how it's going to impact your overall plan, and we've thought that piece of it through. And so, thinking through it and sticking to that plan is the hard part, but just
Mm-hmm.
have that plan, know how it's going to impact you, and what things you may or may not have to change. And for most of our clients, we've built their plan with the idea that this would happen, and also with the idea that it wouldn't change their outcome and it wouldn't change their daily lives for the most
Yeah.
part.
Yeah.
from a financial standpoint. And then again, focus on controllable factors. So concentrate on aspects within your control, such as asset allocation and risk tolerance, rather than the unpredictable market fluctuations and trying to time the market, right? And have those conversations. And one of the exercises that I love doing that we did with a lot of clients over the last couple of years is just like know your portfolio and know what the downside risk is in a really bad market and what that dollar amount is. Because, as you grow your portfolio, the percentage might stay the same in terms of what kind of a downturn, but not necessarily the dollar amount, right?
Right.
So going through that exercise and knowing what that number is beforehand will help you prepare for it.
Yeah. Well, and also knowing a little bit about your portfolio, because a lot of what happens in the moment when you're hearing the news, the NASDAQ's down X percent since, in the last 2 weeks, you're going to take that percentage and multiply it by the last balance you knew in your portfolio and assume that that's where you're at. And you're going to say, oh my goodness. But most people are not 100% in the NASDAQ or 100% in the S&P 500 or whatever. Most of our clients are somewhere in the neighborhood of 40 or 50% in bonds.
Right.
And so it's like, no, you need to step back and at least consider how you're allocated before you have the emotional reaction queuing up in your head all the money you think you've lost.
Yeah.
And I guess the downside of that is where maybe we're encouraging people to pay more attention when they'd probably be better off not. But,
right.
I prefer that to jumping to bad conclusions too.
Yeah, I mean, and just knowing the type of person you are, right? Like if you're going to see the market and you're going to start doing those calculations, yes, you're better off pulling up your actual account and seeing where you're at, because it's probably, not as bad as what your mind led you to believe it was. But also, like if you're not worried until you look at your statement, maybe don't look at your statement for a couple of months, right? Like figure out which one of those people you are and what's going to make you feel better.
Yeah. So yep. It's
hopefully this is helpful. Like we said, it's normal. It's natural to have those fears and emotions right now, and how you end up dealing with them is going to be the biggest determining factor in how successful your plan is. So make sure you're aware of that and kind of embrace the fact that it's happening to you and try to get through it without, making decisions that you're going to regret someday.
There you go.
Yeah. With that, like I said, Dave, we'll be back here in a couple of weeks with our quarterly market update and giving some insight into the more technical aspect of things. But, you can't. The technical aspect doesn't really matter until you deal with the emotional aspect, right?
Well put. Yes.
So that's the first step first, and then we will be back with the technical aspect here in a couple of weeks and talk through those issues as well. As always, Dave, I appreciate you being my sounding board.
Thanks, Nick. It's a team sport.
Until next time, my friend.
All right. Take care.
Thank you for joining us for another chat about your retirement and finances. Please hit that subscribe button. You can also contact us at srbadvisors.com or email us at info@srbadvisors.com. See you next time on Kitchen Table Finance.
This is a Zedia Media production.